Hey guys, welcome back. Another Wednesday options update where I share with you all the good, the bad, the ugly, the planning of the past 5 days trades. And that goes from the Wednesday from the week before to Tuesday close. Now, this week, nothing but bad news. But in my opinion, I am in great shape going forward. A lot of you don't know, and I don't know how much I've shared of this, but ever since December, I've been wanting to change up my option strategy, right? I wanted to get into, if any of you follow my Retire with Less series, the paper portfolio, that's pretty much what my plan was going into 2022. I ended up not making the changes needed to do that in December of 2021. And then I end up getting stuck in the January correction. Well, there's a couple lessons there, right? Sometimes if you have a plan, you just need to execute it. Don't A lot of times, you put stuff off and you end up in a mess, in a pickle. Another thing was I took some losses in single stock this month. That doesn't show here on the options thing because they were assigned stocks and I sold them, but I took a few $1,000s of losses in single stocks. Reason why I did that? I'm not a stock picker. I know that. I've been like that for quite a long time. It's the reason why my channel was actually known as the GW ETF channel for quite a while. And I think, fascinated with the shiny things, right? I think it happened to all of us. I think that's some of the reason, not some of the reason, that's all of the reason why I got assigned some shares in stocks that I really didn't want in the beginning, right? I should have took losses on them, or I shouldn't have been in them in the first place. So going forward, what you'll see, this will still take me some time to work through because I have to deal with this January correction now, is something very similar to the Retire with Less series. If you're not familiar with that, check it out. I do them once a month on Saturdays. I follow a paper portfolio where we try to generate income off of $250,000. It's a paper portfolio using essentially just a wheel strategy. I might be a little bit more complex in mine because I don't have $250,000 and I'm still trying to generate a significant amount of money. That being said, let's go through all of them and I'll try to maybe interject some more thoughts on my thought processes here as we go along. So we started back on the 2nd. I didn't do anything on the 2nd, but on the 3rd, February 3rd, let me get rid of these fees. I always forget to do that because that number confuses me. There we go. So, am I zoomed in enough here? Let's zoom in one more shot. There we go. SOXL on the 3rd. I rolled this one down. I had a 45 strike and I rolled it out. So I closed it out for a $345 loss. But I rolled it out, and we'll see that when we go to the open positions, because these are all the closed positions. TNA, another one I rolled out. This was a 65 strike. Closed it for $878. Took $617 loss there. QLD, not to be confused with QILD. This is a 2x leveraged ETF tied to the NASDAQ. I don't like this one. They only have monthlies. I'm probably going to, once I'm out of this one, I'll probably never play this one again, but I rolled that one down as well. Took a $216 loss on it. Vizio, actually that's not a roll, that's a loss. I was talking about some of the single stock here. Vizio took a loss of $195, and I also took a loss and sold out of the 100 shares of stock as well. So Vizio, single stock, goners. ARCG, I took a complete loss on these. I really didn't want to be exposed to ARC G. I got enough in ARC K already. So ARC G, we just said bye-bye. 214 and 148 respectively lost there. I did sell one ARC G or bought back and made $9 on one of them. MSOS, the cannabis ETF, took a loss on it completely out. $51 and $16 there. Fubo took a loss on these. These were two covered calls. Lost about $7 there. But I also sold the shares for a significant loss. I don't know how much it was, but it was 200 shares I sold out. Stone, another one. This one was a covered call, though. We made profit on this one. Bought it back for 50 cents and made $30. Fubo, another put, closed that out for a loss of $44. And Stone, another put, closed that out, lost $45. So I sold out of Stone, I sold out of Fubo, I sold out of Vizio, I sold out of Palantir. Realized losses of a few $1,000s there, okay? To me, it was worth it. I mentioned in a couple episodes ago that maybe it was on the live stream with Dave that when I made the decision to get out of them, out of the single stocks, I should have done it right then and there. I tried to get fancy and sell some calls and lower my cost basis. When in fact I really didn't want to be in these stocks, period. And I just prolonged it, and I actually made it worse because yes, I made a little bit of money here and there on the calls, but as the stock retraced, it didn't really make a difference. I should have just cut my losses when I decided I didn't want to be in them. So that's a good lesson to learn right there. TNA today closed out a 45 put for 25 cents, made $55 on it. So now with all that being said, let's take a look at what we opened. And it's going to be fairly significant because of the rolls, right? There's that Stone. I already talked about that. We lost on that one. I did open up a Facebook. I did a 190 strike, and it's still retracing. Now going forward, what I picture for the option portfolio is some income ETFs. I didn't speak about that, but I'll speak about that here in the premium cooking slide. Indexes, QQQ, maybe SPY, maybe some tech sector. I don't know. And maybe one or two high quality, large or mega cap stocks that I like, and maybe one, call it a speculative play, right? I don't want to be where I was before in December and January where I had 40 to 50 positions, right? I'd really like it to be, less than 10. 40 to 50 positions. Could I have, like, for instance, all this stuff, right, that I took losses on it, would I have been okay? Could I have kept rolling? Absolutely. I'm pretty confident that it will all probably been okay. But that wasn't the plan that I had for 2022, and I wanted to execute the plan. So that's why I made those moves. So Facebook 190 strike, collected $225. METV, that is the Metaverse ETF. I sold a put on it, 12 strike, collected $45. I do have 100 shares of METV, and I still own Lemonade. If you guys remember my Lemonade puts, I still own Lemonade. I own 100 shares and a couple of puts that are in the money at the moment, and I don't know what I'm going to do with those just yet. So Lemonade is actually the only single stock and Facebook that I have in the portfolio at the moment. SOXL, that was part of those rolls. I rolled to a 40 on March 4th and a 35 on March 18th, collected $375 and $294 respectively. That QLD that I said I rolled was the 2X NASDAQ. I rolled it from a 70 to a 65, collected 340 on that. Last week, I sold 5 cash secured puts on RYLD with a $22 strike price. I added 5 more, so we have 10 total with an average premium of 38 bucks. So 10 contracts on RYLD for about, what is that, 377 bucks. Now, what I also picture in this portfolio is a core ETF holding. And that could be anything. For me, I would like it to be the S&P 500. I don't have the account big enough to really put in a put on SPY and take possession of it, because SPY is like what, 42 grand, 43 grand, something like that. So what I did was I found SPLG. SPLG is a S&P 500 index ETF. It's akin to like the QQQM is to QQQ. If you don't know the difference, one's just cheaper expense ratio and a cheaper price. So SPLG is like SPY, except it has a cheaper expense ratio, but the options aren't as great. But you still get, exposure to the S&P 500 index, just like SPY. Options just aren't as great. Expense ratio is lower. Per share price is cheaper. It's about 53 bucks. And yeah, so I'd like to build a position in a long-term growth, and that would be SPLG at a 50 strike. Got 65 bucks on that. And there's the TNAs that I rolled. I rolled that 65 strike down to a 55 of February 25th and a 55 on March 18th, collected 544 and $374 respectively. So as you can see here, it's just going to be, besides the QLD, I mean, I still got things to work through, right? I got to get through these SOXL rolls. I got to get through the TNA rolls, the QLD rolls, the ARC-Ks. I got to work those through. But eventually, the portfolio is going to look fairly similar to the Retire with Less paper portfolio series. But it's going to take some time. And I think the moves and losses that I took are a good start to that, in that direction. Now let's take a look at premium cooking. Now we look at premium cooking, right? We closed 15 positions, only opened 9. Profit realized negative 1805. That's just on the option side. That doesn't include the stock losses. So took a pretty big hit. But it's something that I needed to do to just try to ground and start building back the foundation that I really had pictured back in December. And I actually feel a lot better now, to be totally honest with you. So essentially, I took last week's profits and sucked them up into the gains, into the losses offset, right? So 1805 loss. Premium sold with 2634. Most of that is in rolls. You can see here out to March 18th is when most of that expires, which is 3600. Total premium cooking 5378.90. Maintenance margin 31,500. Buying power usage shot up to 27%, and cash balance went down to 85,694. Now you're going to say, why? I invested about $31,000 into income funds, and like I said, it's going to be similar to the Retire with Less paper portfolio, and I'll give more details on those in future videos. So cash balance is down, but it's actually up if you consider the $30,000 that I invested, plus all the cash that came out of selling all those stocks for a loss. No deposits, no withdrawals. Net lick down to 116,200. So that is about $2,500 loss in net liquidation value. So return on maintenance margin minus 6.89%, return on net liquidation value down 1.5% for the week. So let's take a look at the performance though overall, right? If you want to look at big picture and see how your portfolio is doing, we can see we started out net lick in January of 123,100. We're now down at 116,200. That is a 5.6% decline in net liquidation value. Now, of course, that's not ideal. That's not what I wanted. But if you look big picture, S&P 500 is down 5.73% year to date. So I'm doing slightly better than the S&P 500. NASDAQ is still down 10.35%, so doing almost twice as good as the NASDAQ. And Russell down 10% as well, so almost doing twice as well there. So overall, not horrible. Yes, it's ugly. But it's definitely not, because if you guys remember, I talked about it last January of 2021, I lost almost $7,000. So we're not even close to that right now, right? We'd go to the quick overview. Yeah, see, I lost 6,800 last January, and we're down about $3,000, right, in income. But I believe it's all coming back. I feel a lot better. I don't feel as depressed. I was getting a little depressed. It wasn't like it was sad, but it was like, this just keeps going. And I got 45, 50 positions that I'm looking at that look ugly. And this isn't what I wanted going into 2022. And that wasn't my goal, right? My goal was to have a clean slate. I was going to take all my losses in December and have a clean slate for January. But the shiny things said, you know what, you're not going to take any losses. Just take them all. We're going to take them to winners. And January proved a little bit stressful in that, not stressful because I wasn't stressed, but it wasn't what I had planned. So thankfully, we're getting to that point, and hope you guys had a great week. We'll see this evolve. Like I said, I'll be 100% transparent. Losses on the plan, buys, sells, everything. So hope you enjoy. If you did, give me a like, share, subscribe, do all that good stuff. We'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.